What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting and trading method we implement can be used to trade any company that's publicly traded in the U.S. stock market. Make sure you hit that like button if you enjoy this video. It really helps the channel grow. And make sure you hit the subscribe and notification buttons. That way you're alerted to when we release new videos. Aside from the Monday through Thursday videos and the weekend video, we do release bonus content from time to time. So make sure you are notified of those videos. The nightly and weekend videos that we do, they do focus on the triggers and targets for trades ranging from scalps and intraday trades to long-term swing trades. So if you want a deeper dive into exactly how we set up our charts and the trading levels we use, the color coding that we use on our charts, make sure to check out the bonus content on our YouTube page. And for more free information about the strat, which is the base of our charting and trading method, you can find more information in the description of this video. I encourage you to watch the full video, because along with the triggers and targets, we do give some pretty good insight into the price action on all time frames. So with that, let's get into the agenda for today's video. We'll go ahead and recap Friday's price action. We'll zoom out like we always do, look at the week, month, quarter, and year. Then we will look at the market maker's expected move for the next week, or the week coming up, depending on when you're watching this video. For the week of October 24th, and then we'll zoom back in to set our 4-hour markers and triggers and targets for Monday. We'll talk about the new triggers and targets for the week, and then we'll review the triggers and targets for the month, quarter, and year. So looking at today's price action, just looking at the scalping chart first, like we normally do, we have the major 4-hour levels on the chart here. We've got previous high a day, overnight high, previous low a day, and overnight low. Along with the opening print, which happens to line up with the market maker's expected move high for the week. That's why it's kind of hard to see here, but at 39.61 we did have our opening print. So general rules: higher lows above or at opening print, we want to get into calls, and lower highs at or below opening print, we want to get into puts. Now if we get into calls and we're going to the upside, obviously if opening print here is here, overnight high is the first target, previous high day is the second target. If we go to the downside, then previous low a day is the first target, and then overnight low is the second target. Now we do have some honorable mentions on here. The market maker's expected move high for Friday or today, depending on when you're watching this video. But yeah, the market maker's expected move high for Friday, October 17th, was 43.42, and the market maker's expected low for that day was 37.72 as well. We have the week flip. So price above this level, the week is green. Price below this level, the week is red. And we have the last week's 50% line, which again, we've talked about how we bounced off of this multiple times throughout the week. So we can see price action first pushed down in this first 5 minutes, but it hammered back up and was able to actually turn green. So we got a push above opening print, but then that failed, and we got the push below. So choppy action at the beginning of the day. Then we finally did get a push up, and if you're looking at the 5-minute chart, you got a higher low here. So you could have entered once price went above the high of this candle here, the two up. And of course your first target would be overnight high. Now that's not a lot of magnitude, so I wouldn't be suggesting getting into the trade for that move specifically. If you're getting in that trade for the move up to the previous high a day and or beyond, then okay, then I probably would have suggested it. But you definitely would have wanted to keep your stop somewhat close, just because there's not a lot of magnitude to that move, and you want to keep risk to reward in mind. But you did get the higher low, the entry here. You got another higher low as well, following a higher high. But then you got the lower high here, so you would want to exit as soon as you went 2 down on this candle, knowing that the downtrend could be started. Now that is above opening print, so just from a high level perspective, it's not at or below opening print, so it's not something that is a high percentage chance for the put. But if you wanted to add a little bit of risk to the table, you could see that this is the weekly broadening formation that we've got here, this purple solid line, and we've got the overnight high right here, and you can see how we rejected off of it, then got a lower high. You could have took the higher risk play because we are above opening print and went ahead and entered puts there. If you would have entered, you would have got the lower high, about the equal low, but you did get slightly lower, then a lower high again, and then the push down to the weak flip. There you did get the higher low. Actually, no, that I think that 3 was a little bit higher, lower than this low, but you did get a higher high on this candle. After you got the high here, it pushed down to lock in that high, but then in the same candle it did go above it again, or not again, but it did go back above it, making the bullish engulfing, or the 3 candles. So that would have been your higher high at that point, and you would have wanted to exit. So not a bad move. If you entered here and exited here, would have had some pretty decent profit, especially if you at the money or in the money and got multiple contracts. So again, the spreads are pretty wide right now because the VIX is pretty high. So you have to you're not going to want to set stops in this case, right? Otherwise you've got to set stop on market, which means it can fill at any level, or you would have to set a 20-30 point or cent stop if you're doing a stop loss, right? So what you would want to do in these cases is you would want to set just a target sell point, right? So you calculate what the sell price would be at whatever level your target is, and you would want to go ahead and set that. And then if you see things starting to reverse, if it didn't quite get to that level, then go ahead and get out of the position, or take off a chunk of your position to at least keep some profit. Maybe leave a little bit. If you're leaving the runners, then you have a little bit at risk, but you don't want to let those run too long in the wrong direction either. But that's how you want to play these wider spread days, right? Your entry, you want to try and get as good an entry as you can, so you want to try and fill as soon as you see, right? So here we got the lower high, and as soon as price went below this candle, you'd want to be trying to get filled, right? And so you may have to fill in the middle of the range, or maybe even the upper third, or top of the middle range, top of the middle of the range to get in. But that's just the added risk at this point in the market because of the higher volatility, right? So if this is not a market that you feel comfortable in trading in, that's fine. You don't actually need to trade, right? We've got 250 trading days in a year, and there's plenty of days. The market moves every day, even when it's sideways. It creates opportunity. So you don't have to play every day, right? Even though the strategy that we use can be used every day, it doesn't mean it needs to be used every day, right? There's not always the magnitude that's going to be there, even when things do trigger in the way that they should be triggering. And so you want to keep those things in mind. And if you don't want the added risk, then don't play, right? It's not the end of the world if you don't make a play every single day, right? So you want to just be smart, play within your risk tolerance profile, and don't extend yourself. When you start to extend yourself, that's when you start to lose money. So don't try and get desperate thinking that you need to make a play, and just make sure that you use the strategy to take the highest percentage chances that you can, right? So once we got to this point, this drop, you probably would want to flip to the 15 excuse me, 1 hour chart, see what's going on there. So we did get the drop down here, creating you did have a higher high, but you made a lower low, creating a broadening formation, or staying within the broadening formation that was created yesterday. So we did get the bounce off of that. It lines up with last week's 50%. So once again, we're bouncing off of that level, and we got the pushback up to opening print. Went slightly above. Went slightly above, peaked above, but was like a look above and failed to go back below. Then we got basically a bounce off a previous low a day. So a lot of choppy action here, and then even on the way back up at the end of the day, with, I don't know if you would really call it a squeeze because it wasn't just straight up action, but with the push up at the end of the day, it was still choppy at times, right? It was still a stair step up. It wasn't just a straight shot up. So we did start to come back through. We're about a little bit over halfway through this broadening formation again, so probably a higher percentage chance that it's going to try and continue to push up to see the upper part of this broadening formation, since it's bounced and made its way 50% of the way up. But we do have to keep in mind this weekly broadening formation, and then we'll look at the charts for tomorrow to see, for Monday to see what the levels look like from a more horizontal level perspective and not just broadening formations. From the 1 hour, we did get the lower high and lower low. Now that was reversed throughout the day with, it was a lower high, but that did create the opportunity to make the higher low, and that's what it did. So we did get a higher low, trying to reverse trend on the 1 hour. You can see we were pretty good downtrend there, but it looks like it's trying to reverse. We're going to need that continued push through on Monday and through the rest of the week to really reverse that reversal. Now the 4 hour is still pretty interesting because we still haven't locked in a higher low on the 4 hour, right? We have the higher high, but we've got the push down, but the second 4 hour candle of today was an inside candle. Let me bring up a more clear chart. All right, so the second 4 hour candle of today was an inside candle. So if it would have went 2 up, or if the high of the second 4 hour candle of today went above the high of the first hour candle of today, then that would have locked this in as a higher low and essentially just continued the uptrend at that point, right, from a 4 hour perspective. Now we do see that we do have somewhat of a downtrend line. We don't put a lot of weight into downtrend and uptrend lines. We like broadening formations better, but you do still have to keep these things in mind, and especially when they interact at levels that broadening formations interact at, then you want to look at those levels as well. So we're looking at a possible point of resistance here again, once we hit this weekly broadening formation. All right, so looking at the day chart, just to get the candle structure. All right, we've got a green hammer, so failed 2 down essentially. So while we did create a lower high on the day by going 2 down today, that locked yesterday's 2 up in as the lower high. But with the candle structure that we have on the day today, it looks like there's a good possibility that we could continue to push up on Monday and lock this in as a higher low. So while this was a lower high, if we get the higher low that's coming off of another higher low, that could mean that we're just making an uptrend within this greater candle from last Friday, right? That was a big move, right? So it's going to take a little bit of stair-step action to get up out of there, unless there was some type of big catalyst, which we didn't have one this week. I don't see one really here on the horizon for as far as a catalyst to the upside. We did see, the president walk back his words on the higher tariffs on China, and we did see positive reaction from that in the overnight, but we didn't see a whole lot of follow through on that in the day, right? So we still opened within yesterday's price action. We didn't have to go 2 down. If things were super bullish, then we would have just continued from where we opened. After the big push overnight, we would have continued to push up and probably given it at least another 2 up, or stayed an inside candle, but would have been closed at the higher end of yesterday's price action if things were really that much more bullish, just off of the president rolling back his remarks on tariffs. So I don't really see a whole lot of other big catalysts ahead. We already had TSM's earnings that didn't really move the market too much. But it is earnings season coming up, so you never know. We'll see how things continue to go. But again, just from just looking at candle structure, we did have the bullish hammer candle, even though it was a 2 down, locking in a higher low. So I think that's enough of talking about today. Let's zoom out a little bit more. Let's look at the week here. Let me just bring up my weekly broadening formations. Oops, that's not the chart. There we go. So again, you can see we're pushing up against this weekly broadening formation from earlier on here in June, July. We did push above it last week, but pulled back to ending up closing below it. We pushed back up to it this week, but closed right at it, right? So maybe even slightly under it. So we want to see continued push up for the bulls. We have to keep in mind, remember this from April 7 low up to this July high, and then we get this pullback in July that created a bull flag that we've got here. Here's the pole and here's the flag. So we drew a fib extension from that move, and that 100% fib extension is basically where we rejected off of at the high of last week, or the week of October 6th. So we have to look at, even if we break above this weekly broadening formation, do we run into that resistance of the fib extension next week as well? All right. So, but all in all, again, nothing breaking down. Again, we talked about how a pullback, especially on the week perspective isn't the end of the world, because we could go all the way down here to this 2350 level before we would set a lower low, right? So lower highs can be, or higher lows can be set anywhere within this range right here. So pullback isn't going to be the end of the world. We're not seeing anything breaking down from the week perspective. That rolls us on into the month. And looking at the month, we'll clear up this chart a little bit more. There we go. We can see that we're easily above this monthly downtrend line that we had started in 2024. It broke above in July. We're handily above it. We can probably take that off of there, but for now we'll keep it on here, and we're just still handily up in a two up, closing in force, right? Meaning we've closed today. The close price today is above the high of last month. So we're in this two up continuation. We've created this V pattern recovery. So from the midpoint of 2024, we've recovered that dip all the way to this April 7th. So we just want to continue to see that push to the upside. We've got last year's 50% line here at 46.79. So expect a little bit of resistance there if we do get to that point before the end of the year. But we do have this gap that hopefully is calling our name up here at the 50 level. So if we do push through this 47.69, look to see if we don't get the rejection off the bottom of this gap here like we sometimes do. Look to see that push through at 50 and then possibly a reversal at that point. It would put us basically at the midpoint of this bearish engulfing candle from January of 24. And that's pretty well known point of inflection, that the midpoints of these threes or these engulfing candles. It's because that really determines will you continue to go up or down. A lot of times that's a reversal point where you push back down. A lot of times that's a point that you push through and then maybe get a little pullback and a bounce off of to see as support, and as you continue the move to the upside. But things were looking real good from the month. From the quarter, looking great as well. Like we said, we're in this one combo, two down, combo, two up. One of my favorite patterns, reversal patterns. One of the reasons is because you tend to get a really big magnitude on those moves, and you can see that is what we have here, right? So the trigger was right here at 36.15, and the magnitude of that move is the high of the candle to the left of the one. So this bearish engulfing candle from the first quarter of 2024, that high was 70.08. So that is the ultimate magnitude for this move. So as long as we're above this 36.15, we're looking real good from the quarter perspective. So again, nothing breaking down. And from the year, even when we did break down, triggering the 1, 2 up, 2 down this year, even that didn't quite reach its magnitude, giving us what looks like is going to be a higher low on the year perspective, finishing with the green hammer. Again, the higher we can close towards the top of this candle here, the better chance we have of going 2 up next year, triggering the 2 down, 2 up with the magnitude of that 70.08 once again. So again, high time frames, even from the week, right? From the week up to the year, things are looking very positive. And we want to continue to, from a long-term swing perspective, you can stay confident in those trades at this point, staying in them, even though we are having this, volatility, a little bit of turbulence here right now. You want to monitor it. You don't want, if you're not in decent profit now, if you didn't get in at the April lows or even in that May-June time frame when we had 2 weeks of sideways action, and you're not in real big profit, then you probably want to monitor those trades a little bit more. But the ones that we've been in from April and May and June, those you can kind of let run a little bit more free right now, especially the ones that expire 2027. Yeah, things are looking pretty good from the long-term perspective. Let's go ahead and look at the market maker's expected move for the week of October 24th. So let's go to the charts. There we go. To do this, I'm just looking at Thinkorswim, and I'm looking at the options chain for October 24th. And we can see over here on the right-hand side, there's a plus or minus 515. So basically what this is the market maker's expected move. There's a 70% chance that there's going to be a plus or minus $5.52 move, we'll call it. to the upside or downside, or to both, making a total of about $11 move. So if we take that $5.51 into account and look at what today's close price is, 40.29, we go to our notes and we see that our expected move once again is it looks like I did $5.51, but if we do $5.51, that gives us a range of 45.80 to 34.78. So if we go to $5.52, we'll just make that 81 and 77. All right, so range of a high of 45.81 and a low of 34.77. So if we go out here and look at our charts, let's just look at that swing. Oops. Yeah, that's what we want. Oh, we're on a 5-minute, that's why. Let's look at the 1 hour. All right, so we can see that we have market makers expected move high up here at 45.80 and a low at 34.78. So we should have a pretty decent move next week, right? So which is pretty encouraging, considering if we look at to move to the upside, there's kind of a lot of things to fight through here. We've got the last week's high, we've got this daily downtrend line. I won't really call out that 4-hour downtrend line, but we've got that 100 fib extension that we talked about here. We've got the another weekly broadening formation. So if we get all the way up here to this 45.80, that's this daily broadening formation line here, that means we would have been able to push through all of this, which would be in my opinion a pretty strong push for the bulls, right? So in the same breath, we do have the pullback, which again, I said I've said before, is not the end of the world. We've got last quarter and last month's high right here as well, lining up with last week's low. So got some areas of support here. The quarter and month flip is right here as well, with the market makers expected move low. So we've got some good support right here that I could see us bouncing off of if we do get the push to the downside. Now, again, that's a 70% chance. It doesn't mean that price is going to bounce at these levels. There are weeks that we have price that goes above those levels or below those levels. This past week being one of those, right? We didn't go much higher than it, but we did go above the market makers expected move high. All right, so let's just look at let's zoom in here and look at the 4-hour markers and triggers and targets. We'll look at it from the scalping perspective first, and it's just basically the same thing that we talked about at the open of this video. The general rule is higher lows at or above opening print. We want to get into calls looking for the overnight high and previous high of day as targets. And if we get lower highs at or below opening print, we want to look to get into puts, first targeting the overnight low and then the previous low a day. So let's say we get a push down in the overnight and we open up here. Obviously, that's below overnight low, or it would probably be at overnight low. I don't know why overnight low wouldn't be down there. Anyways, it would be at overnight low. Activate. Let's say we open up at the overnight low. Right, we're obviously there, so overnight low is taken out of the picture as a target. So if we do get open here and get a push down, then a little bit of a bounce, and we get a lower high here, we want to enter puts, and we want to target the previous low a day at that point, right? And that would kind of line up with this 15-minute broadening formation, maybe wicking a little bit through it, lining up with this week's this past week's 50% line. So the areas of support here, again, pullback isn't going to be the end of the world. If we do open here and we get a push up and then pull back a little bit and we get the higher low here, then we're targeting the overnight high first, and then previous high day is our second target. All right. So very simple. I won't beat a dead horse. Let's go ahead and look at the 4-hour time frame for more of a full day trade, and look at what we've got here. So we can see that, let's make things a little bit bigger here. We can see that we had a 2 down and then a green inside candle for the 4-hour candles for Friday, October 17th. So starting out here on Monday, October 20th, if we get price action to the upside, that triggers a 2-1-2 up reversal. Now that triggers here, and the magnitude is the high of the 2, so not a lot of magnitude. The trigger being the high of the 1. magnitude being the high of this 2. But we do, run into this weekly broadening formation, this daily downtrend line. So it wouldn't be beyond a reasonable doubt to think that we could see a price reversal at that point, even if the initial price action does push up and give us the 2 up. At the same time, if we go 2 down, that gives us a 2-1-2 down continuation. The entry being here at the low of the 1, the exit being, the target, the magnitude being the low of this 2 right here. All right, so looking at the day, if we want to look at, again, a full day trade, possibly overnight swing, we've got the green hammer. So if we get the price action to the upside and the price goes above Friday's high, then we want the magnitude of that move is last week's high, which is actually that Thursday of this past week. So we've got a trigger of 40.80 and a magnitude of 41.93, decent sized move. But again, we run into that last week's high in the daily downtrend line, the weekly broadening formation. So a lot of resistance that we've got to fight through here. There's also this 4-hour broadening formation that was formed as well. So if we get price action to the downside, then that triggers this 2 up, 2 down, 2 up combo 2 down with the magnitude of the low of this 2. But if it reaches this and goes past that, then we've got the combo 2 up, combo 2 down with the magnitude of this 2 down here, which is last week's low. All right, so let's just go to the notes here so we can look at the numbers, right? So this is for Monday, October 20th. There will be 49 trading days left in the year. The close price on Friday, October 17th, was 40.29. We got to get that out of there, because we don't know what those will be yet, right? So we don't know what the week flip will be yet, because the week hasn't opened, but we know what where the month flips red, the quarter flips red, and the year flips red. Again, we talked about the week's expected move, and we know where our gaps above and our gaps below are. So on the 4-hour, if we get action to the downside, that triggers the 1-2 up, combo 2 down, triggering at 38.98, magnitude of 38.32, and extended target of 37.71. If we go to the upside, that's a 2-1-2 up, triggering at 40.51, magnitude of 40.80, which would then trigger the 2 down, combo 2 up, and the magnitude of that is 41.13. On the day, price action to the downside, we go 2 up, combo 2 down at 38.32 with the magnitude of 37.71. If we reach that point and go beyond, then that triggers the combo 2 up, combo 2 down with the magnitude of 36.62 and an extended target of 35.95. If we go to the upside, that triggers a 2 up, 2 up continuation. That is a 2 down, 2 up reversal with triggering at 40.80 with the magnitude of 41.93. And that then would trigger the 2 down, combo 2 up with the magnitude of 42.84 and an extended target of 43.37. All right. Now I've already gone through the week, month, quarter, and year on the chart, so I'll just go through the triggers and targets here, especially since the only thing that's changing is the week. The month, the quarter, and the year are still all the same. So on the week, if we go to the downside, that triggers a 2-1-2 down, triggering at 35.95, which is that extended target to the downside on the day. And then the magnitude of that move is 34.17. We have extended targets of 33.18, 31.36, and 30.68 to the downside. If we go to the upside, that triggers a 2-1-2 up, triggering at 41.93 with a magnitude of 43.37 and extended targets of 45.67, 46, and 46.79. All right. On the month, we talked about how we triggered the 2 up at 35.49. So as long as we're above that level, we're still in force. We've hit that first target of 41.19, looking for that 43.80. If we hit that, next target on the inline would be 46.79. On the quarter, we triggered and completed the 2 down, combo 2 up, triggering at 35.49 with the magnitude of 36.15. At that level, we then triggered the 1 combo 2 down, combo 2 up. So as long as we're above 36.15, we're in that 1 combo 2 down, combo 2 up. The full magnitude of that move is 70.08, but since it's such a big move, we've got some intermediate targets here. And once we get to that 50 level, we'll list out some more intermediate targets before we get to that 70.08. On the year, again, we talked about how we triggered the 1, 2 up, 2 down, but we have reversed it at this point. We didn't quite reach the 621. We reached, what was it, 723, I believe, on April 7th. And so we are looking at a higher low. The candle structure on the year is a green hammer. You know, we're looking in good shape to go 2 up next year for the 2 down, 2 up, targeting that 70.08. But again, we've got to make it through the end of the year. We still got 2.5 months left. So until then, we've just so far got a failed strat or a reversal of the strat. So we just want to continue to try and end the year at the highs, right? So there you have the triggers and targets for the everything from scalping to the year chart. I hope everybody has enjoyed this video. If you have, please give it a thumbs up. Like we said, it goes a long way to help the channel grow. We're not selling anything on this channel. We're just trying to jam in as much information as we can into relatively short videos and provide people some stability in their trading. So thumbs up goes a long way. It really helps, and we really appreciate all of those that continue to watch every day. The channel has grown quite a bit, and really more than we thought it would. But we really do appreciate those that continue to watch every day. Those that leave comments on the videos. We like interacting with you on those. So continue to leave us those comments, and continue to get this market for your worth, right? There's plenty of money out here for everyone to get. So be solid in your plan. Hold strong to the rules, not just the rules that we talk about here, but any rules that you've established for yourself. Continue to monitor your risk and reward, and make sure that it's working for you and your trading plan. But if you're watching this at the beginning of the weekend, I hope the rest of your weekend goes very well. If you're watching this at the end of the weekend or Monday morning, I hope you had a great weekend, and I hope everybody has a great week of trading in this week coming up. Look forward to seeing you out there.